Have you ever wondered about the invisible system that basically powers our entire world? It's not built out of steel or concrete, right? It's this complex web of money, markets, and rules that shapes pretty much everything, from your morning coffee to global politics. Today, we're going to pull back that curtain and see how it all works.
I mean, it's a fundamental question, isn't it? Where does all the cash actually come from to fund everything? A brand new skyscraper, a tech startup, the latest app on your phone? The answer isn't some giant vault full of money. It's a massive, interconnected network that's always in motion.
You know, a great way to think about it is like the body's circulatory system. It's not just a bunch of banks and stock markets. No, it's the vital network that pumps capital, the economy's lifeblood, to all the places it's needed most. It's what fuels growth, innovation, and of course, jobs.
So if we really want to understand how this thing impacts our daily lives, we've got to start with the basics. What exactly is this system we keep talking about?
Okay, so at its very core, the financial system really has one main job: to be an engine. It takes all these pools of savings from regular people, from big companies, and it channels that money to those who can actually use it to build something, to create something. Without that connection, so many great ideas would just, well, they'd stay ideas.
To really get this, we can break the whole thing down into 4 key pieces. First, you've got the financial markets. Think of these as the big arenas, like the New York Stock Exchange, where everything gets bought and sold. Next up are the financial institutions. These are the players, like your local bank or a big insurance company, who act as the go-betweens. Then, you have the financial instruments themselves. These are the actual things being traded, like stocks and bonds. And watching over the whole game? Those are the regulatory bodies, kind of like the referees. Think the SEC, making sure everyone plays fair. We're going to touch on all of these.
All right, so let's build this system from the ground up, starting with those basic tools we just mentioned, the financial instruments.
So just imagine a company wants to build a huge new factory, or maybe the government needs to fund a new bridge. They need a ton of cash, right? Well, to get it, they create and issue these financial products. We call them securities that they can sell to investors to raise all that capital. The first, and definitely the most famous, of these is a stock. Now, when you buy a share of a company's stock, you're not just gambling on its price. You are literally buying a tiny piece of that company. You become a part owner, and you have a claim on its future success.
Now, the other big one is a bond. And if a stock is all about ownership, a bond is all about being a lender. See, when you buy a bond, you are essentially giving a loan to that company or government, and in return, they promise to pay you back the full amount down the road, plus make regular interest payments along the way.
Okay, so companies issue stocks and bonds. They're raising money. But where does this actually happen? Answering that question gets at a really important distinction in how all these financial markets work.
This slide really breaks down a critical difference in where the money actually goes. On the one hand, you've got the primary market. This is where a security is born. You know, when a company has its IPO, an initial public offering, the money from investors goes straight to the company so it can grow. But then what? Well, that's where the secondary market comes in. This is where investors trade all those existing securities with each other. The money doesn't go to the company anymore, it just goes from one investor to another. This is super important because it provides liquidity, that is, the ability to easily buy or sell, and it helps figure out what a company is actually worth.
So if you trace the journey, it's pretty clear. A security gets created in the primary market for one single reason: to get cash for the company. After that, it lives out its life in the secondary market, where its value goes up and down based on what millions of investors think it's worth at any given moment.
Okay, so we've covered the instruments and the markets where they're traded. But who are the big players? You know, the institutions pulling the levers and making sure the rules are followed in this giant system. Well, it's really a whole ecosystem of players. You've got the commercial banks that we all know and use for checking and savings accounts. Then there are the really powerful central banks, which manage an entire nation's economy. You also have regulatory agencies like the SEC here in the US, which are basically the financial police. And finally, you have big international institutions like the IMF and World Bank that try to keep the whole global system stable.
But you could argue that the most powerful player on the entire board is a country's central bank. For the United States, that's the Federal Reserve, or the Fed. I mean, when the Fed decides to raise or lower interest rates, that's not some abstract thing. It directly changes how much it costs for everyone to borrow money, from you buying a car to a giant corporation building a factory. It sends ripples through the entire economy.
And here's the crucial part. Those ripples from a decision by the Fed, they don't just stop at the US border. Not at all. They spread out across the entire world. Because today's financial system is a truly global, interconnected web.
This quote really nails the double-edged sword of our modern system. The fact that money can flow so freely around the world creates incredible opportunities for growth and investment, but it also means that a crisis in one corner of the world, like the US housing market collapse back in 2008, can spread like a virus across the globe. We call that financial contagion. And this money moves in a few key ways. There's foreign direct investment, which is when a company from one country builds a factory in another. You've got portfolio investment, that's when, say, your retirement fund buys shares in a European or Asian company. There's also direct bank lending across borders, and even official flows when governments and central banks move capital around. All of this just weaves the economic fates of countries tighter and tighter together.
Okay, I know this has been a lot of high-level talk about markets and global flows of money, but let's bring it right back down to earth. Why should any of this matter to you?
Because here's the thing, whether you realize it or not, this system is running in the background of your life every single day. Think about it. The company you work for, it might only exist because it was able to raise money in these very markets to get started or to expand. That interest rate on your car loan or your mortgage, yeah, that's directly influenced by what the Fed does. And if you have a 401k or any kind of retirement savings, guess what? You're an investor. You're participating in these exact same markets. At the end of the day, the health of this system is the health of our economy.
So, when you strip away all the jargon and complexity, the entire global financial system really runs on two simple things: a set of established rules and our collective trust that everyone will follow them. But with new technologies like crypto and shifting global politics challenging those old foundations, the biggest question is the one we're left with. What will the financial system of tomorrow actually be built on?